gave up managing billions to become a better investor. Episode 37 from the Number Three Lathe. Hello. Yes, interesting times this week. Just an hour or so ahead of the Federal Reserve giving their views on interest rates. What are they going to do and related? Naturally, as after I publish this and perhaps people listen to this and related, we will know whether the Fed raise rates or not. I don't think they should, but we'll see what, not only what they do, but what Jay Powell says as well, which is going to be fascinating. And of course, as I'm speaking on a Wednesday, Thursday will be the Bank of England coming together with their thoughts and conclusions. We shall see. You know my thoughts on that already. Central banks pretty much all around the world should be not raising interest rates anymore beyond what they've done. Anyhow, I thought just a few quick comments, as I know I'm going to be a little bit busy later on this week, so no chances for podcasts for until probably the weekend. Kind of interesting, isn't it, how I think some positive news actually, that China has been invited to an big AI conference in the UK in a couple of months' time. I think that's really good. It's kind of fascinating, isn't it? Whilst I think from a geopolitical perspective, positive to be embracing with China, lots of sort of interesting different thoughts, particularly in the United States, which I think is probably incorrect, but of course, naturally, we shall see on all of these fronts. But kind of interesting to think about AI actually, or hear about the AI conference in a couple of months' time, which I think will be interesting and fascinating. Again, people forget that I think the first AI conference in the UK was in the mid-1950s, which is something which has been kind of not particularly looked at or considered, given the recent great interest in artificial intelligence and discovery of it, it seems, by many people. But there you go. Kind of interesting to hear actually. I saw in a quite fascinating sort of source that I came across earlier today, that in the question, when will AI deliver broad production gains for economies? Many people, the majority of people, actually thought between 3 and 5 years, which struck me as the sort of normal kind of medium-term sort of thought that many people give towards not just investment ideas, but general kind of geopolitical shifts and related, which is of course nice and is always going to be to a certain way correct, because if a change is occurring, then it doesn't just happen today or tomorrow. It may happen over a decade or a lengthy period of time and related. As investors, though, as we've seen too many times over the last few decades, think about the dot-com boom in the early part of my investment career, how the perception towards the opportunity was miraculously hugely impacted in terms of share prices and related, clearly overly so. We only need to go back to all sorts of other tulips and related South Sea project and related factors, where obsessions, sort of very, very rapid sort of excitements about an investment area suddenly get overly factored in, and reality. And I've got to kind of feel that still that AI potentially fits into that perspective. Actually, it's been changing our lives for the last easily 20 years, probably arguably more than that. If you think of some of the broader computer impacts on all our lives. But in terms of the huge excitement over the last sort of 9-12 months, NVIDIA, and I know NVIDIA's a good company, it's an interesting company doing great stuff, but I still will come back again to their share price movements this year or year to date. And I kind of feel that people getting very excited about NVIDIA prevailing share prices, perhaps, well, I would wait till the next set of quarterly numbers. Let's put it that way. Anyhow, what else has been happening out there? A little bit of geopolitics, of course, and also I think the OECD update, geographic update, was kind of fascinating. Interesting to see G20 world overall growth expectations for next year. They've come down a little bit versus the the anticipated sort of just above 3% growth levels for this year, down more towards sort of 2.7, 2.8, 2.9% arena. Of course, in some individual companies doing better, some doing a little bit worse, states doing a touch worse in all likelihood compared to this year. The UK, by contrast, potentially doing a little bit better, but that's perhaps because 2023 has perhaps been a little bit trickier. Did you see, though, today's UK stats on inflation and PPI and related, which actually were, a lot of people were saying, well, they're going to actually be a little bit worse than expected. They're going to be a bit higher. It's going to put pressure again on the Bank of England, but kind of interesting to see some of the issues I've been sort of talking about on these podcasts, that the inflationary pressures out there are nowhere near as high as some people are thinking. Best indicated via actually the supermarkets, to be honest. Go to visit a local UK supermarket. You can feel the opportunity for a few bargains. And even though obviously a few things are going up in price more than we would have seen over the last few months, generally you can see the fact how the combination of more supply and less demand impacts potentially anything and everything. Supermarkets being a very good guide for an essential good, if you like. We all need to eat somewhere and from some shop, or buy it somewhere and related. And so therefore very insightful for people. It's not quite like looking at a luxury good or a car or something like that, which you perhaps don't necessarily need to be purchasing. In terms of individual stocks, not so many reporting, a few ones of moderate interest, but keeping up the talk about food matters. I did listen to the General Mills conference call for their Q1 24 numbers, slightly different timescale to their reporting base earlier today. I quite like General Mills as a company. You probably know plenty of their products, Cheerios, Betty Crocker, Nature Valley, various pet foods, Haagen-Dazs, of course. How could I forget that one? It's a really nice company, I think, General Mills. It's been going for ages, 150 something years or something like that. But as an investor, I know institutionally I have been involved with the company 10, 15 years ago. Did a good job for the funds that I was running at the time. Individually, over the last few years, I have at times invested in the company, not one which I had invested in for the last 2 or 3 years. And actually, I thought the shares had got a little bit ahead of themselves a year or two ago. Still like the brands, but too much was factored in. It's kind of interesting. I think perhaps some of the overexcitement about the pet food side, which they bought into quite well. And obviously that worked quite positively during the early COVID period, more people having a pet and related matters. But the shares have pulled back over recent times. Not the only food and related company to see such an impact on their shares. Kraft Heinz, for example, I'm still a bit perplexed as to why their shares are down at prevailing levels. Yes, I see competition. Yes, I see private label angles. Yes, I see, obviously, as indicated, consumers having challenges for their choices. Plenty of different opportunities out there. But as we saw in today's General Mills numbers, again, great price mix. I think yes, a little bit of debt, but good free cash flow as well. What I would say is sort of a low double-digit EV/EBIT ratio, an ability to keep on paying that sort of 3% dividend yield through their free cash flow generation. Great products, still growing, of course, globally. A bit like Kraft Heinz actually have learned that just having a US-centered sales focus is not smart, not with great brands. And General Mills are a bit more advanced in this actually than Kraft Heinz are. But the sort of the global scope over time with great brands, I mean, it always helps. It's always a possibility. Anyway, in terms of individual stocks related to today, I think the prevailing $65 share price on General Mills, in my opinion at least, is undervalued. That would be my perception. A good total return scope company, in my opinion. Anyway, just a few thoughts ahead of the Fed. We'll see what they say. Bank of England tomorrow. and various other matters over the next few days. Look forward to giving some more podcast thoughts, probably at this upcoming weekend. But thanks so much for listening, and I'll speak to you soon. Bye-bye.